Thank you so much. Good evening, everybody. Welcome to this investor call for Q3. And, as you have noticed it, based on our ADT, even this quarter is not as much as we thought we should be able to do that. The only silver lining is that options contracts are doing well, and we also started charging on options contract. As a result, we made about 10 crores of rupees in this quarter. And probably the trend will continue, and the new contracts are being introduced. Very recently, we introduced in this month the new natural gas options contract. That started doing well, and in the initial 1 week itself, the volume clocked almost on 230 crores. And I think going forward, that is another product that we can look forward to. And during this quarter, some maybe one or two three regulatory important changes have taken place. One important thing is our crude palm oil contract has been suspended along with other contracts on MCX. And actually, we are almost getting about 350 crores of average daily turnover, and it's doing well. And SEBI also approved an options contract on that, which we were to launch in the month of January. And we were expecting good rise there because of volatility in the underlying contract or underlying commodities. Unfortunately, as you are aware, that the price determination is not taking place on MCX. It is in Bursa, Malaysia. Almost 98% of the product is imported, and we have no control on it. Okay. Yet there was a clamor for it, so that led to suspension of the contract along with other products, and especially the edible oil contracts. Without much application of mind, I would say this. Unfortunately, that it takes time for us to get it restored. It's easy to suspend, but it takes a lot of time to bring in liquidity, restore confidence of the investors in these contracts. That is a big challenge for us, even if it is restored. That's one important thing that has taken place. Other thing, of course, it was implemented from 14th or 15th of January, but the peak margin appeal circular, which was applicable till 5 o'clock in the evening, has been made applicable till 11:30 or 12 midnight, till our markets work. As a result, in addition to the up to 5 o'clock, whatever peak margin calculations that we are doing and submitting to the member brokers for collection, we need to do it beyond 5 o'clock also. So that has also removed some operational leeway that was some brokers were enjoying maybe after the 5 o'clock. So that is another important development that has taken place. The third, which is important, is that the third important one is that segregation of collateral among various segments of the exchange. So we need to segregate it with respect to NSE, BSE, MCX, how much collateral a client has given, and that has to be uploaded on the exchange platform. It adds to a lot of compliance, but otherwise it doesn't, in my view, achieve much of any transparency. Yes, as long as you know how much total money has been given by the client, that's good enough. You don't need to earmark which exchange what, etc. And that takes away some operational leeway or add some work burden whenever that collateral is shifted from one exchange to another exchange or one segment to another segment. These are the three important things that have taken place. Apart from it, of course, SEBI has come out with the spot bullion exchange, domestic exchange guidelines. And since we do not have a trading platform immediately, our board has decided that we will have it developed. Maybe TCS will only develop using the existing platform, which they are developing for the CDP, that is Commodity Derivatives Platform. Once the build is is given for our testing. Of course, up to drop 2, they have given the testing and the test. Delivered, and the testing is going on, and maybe that stabilization will take some more time. Only post that they will take up that very platform and develop it as a spot platform. Having said this, on the international bullion exchange, the developments are very good, and government has issued a notification, probably you're all aware, that any jewelry company or who is in the business of jewelry making or jewelry industry, if they have a net worth of 25 crores and 90% of the business is in the bullion, they are directly allowed to import via international bullion exchange. So many have shown interest, and many applications we are receiving it, and that is in a sense disintermediation. There are 20-25 canalizing agencies. So now people don't have to import via those canalizing agencies. They can directly import from these international bullion exchange. You are all aware that we have about 20% stake there, and all exchanges and MIS have put up this, BSE and SE, CDSL and SDL and MCX. So this is another development that I must share with you. Then in terms of client participation, etc., yes, we are more or less keeping that client participation as last year, because many are moving towards what should I say, towards options contract, and there the number is increasing, and we are hopeful that we will be able to shift the focus from futures to options. That doesn't mean that futures is not something that that's not worth pursuing it. But considering some of the margins that are there, clients are choosing between the two, and wherever there are high margins are there, maybe options are better for the investors to pursue. And that's how it is happening at this point in time. Mr. Bolar, you would like to update few on financials, and thereafter we'll keep it open for question answers.
Okay, sir. Thank you, sir. Dear everyone, this December quarter as compared to September has been better. As MD said, we have started charging on option. The top line has increased by 5%, and we have been able to keep our costs under control, which you have been able to see from quarter to quarter. And thanks to that, we have a profit of around 6%. So when we compare to September 21, we are marginally better, which is good signs for us. And we have kept, more importantly, we kept our costs under control, and we have started charging in options. So going forward, that's a positive trend that we see. Yeah, I'll now leave it open to question and answer. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good evening, sir. So 3 questions. So first is, what is the status of electricity derivative contracts? We have heard that there is a committee which has been set up by SEBI. Is it right? And what is the kind of timeline we are looking at for launching this contract?
Yeah, go ahead. All 3 you can ask me. I am noting down and I will answer.
Okay, sir. Can you please explain once again the peak circular, which you said that it has to work beyond market hours? How does it impact the margins, and is there any adverse impact of this on this current quarter? And when was it applicable, for which date? And third is on the spot bullion exchange. Pardon my ignorance, but can you launch this in the current form, or do we need to set a separate bullion exchange? And what is the criteria for setting up this bullion exchange, and what is the kind of timeline we are looking at for launching this? There are 3 questions.
Okay.
Thank you.
Thank you. See, on the electricity derivatives, there is a joint committee or a working group of CERC and SEBI has been set up under the agreement filed with Supreme Court. So they have set up a joint committee, and they are the ones who have to evaluate the contract specifications, and accordingly they have to take a decision. Pending that, we are organizing a lot of awareness programs, both from European participants, some of them who are in the industry, and European Exchange also. We have already done that, and we have also done with the just a week before, U.S. Energy Department has conducted a program where we also participated to CB, CERC, and the state regulators are also there, electricity regulators, to all of them, and IEX has also participated. So the ecosystem development is going on, but parallelly our application is still with SEBI, and I can't put any timeline, but we have been changing them constantly to give approval for electricity derivatives. This is one part of it. The peak margin, the application. Okay. Now, the peak margin, what it does is daily we take 5 times snapshot, and at that time, what is the open interest of the client and what is the margin collected by the broker from the client, and if there is any shortfall, obviously penalty will be levied. If the margin is sufficient, no problem. Now, instead of giving 5 snapshots, we will be giving 8 snapshots. Probably you are aware that some of our contracts are international prices they track, like your bullion as well as the energy contracts. So they are mostly active post 5 o'clock, 6 o'clock trades. So even if I have so one is that we will be giving the snapshot for those clients, not for those clients, for everybody at that point in time. That is at 7 o'clock, maybe 9 o'clock and 11 o'clock or something like that. There are some timings are there. And accordingly, the margins have to be collected by the brokers. Earlier, that was not the case. If they have complied by 5 o'clock, that is done. Point number 1. Second, the argument that we have also advanced is, if I have entered into a contract at 5 o'clock, I hedged my position, and I'm done. I paid fully the margin. I go to bed. But then, if the prices move up in maybe at 8 o'clock, 9 o'clock, then the brokers will call me and then ask me to give additional margin because the valuation has gone up, open interest valuation has gone up, and I need to bring in additional margin. Although the position may be in profit, by the way. Okay, still I have to pay margin because 10% of the open interest value is what is counted, and as accordingly one has to bring in the 10% of whatever is the margin that is applicable for that commodity. So that is applicable from 14th or 15th of January. Mr. Praveen, you can correct me, of this month. As of now, we have not seen so much of impact, but I am not too sure about it at this point in time, how much it will impact. But definitely it is a negative, characteristic for trading in the exchange. And mind you, we are the most active exchange in the post 5 o'clock, because other exchanges almost on nil trading they have it. And this is one part of it. Coming back to the bullion spot exchange, that is domestic exchange I'm talking about. SEBI has come out with a option for anyone to go for a separate exchange. If you have to go for a separate exchange will have the same conditionalities, like no single entity can take more than 15%, and only certain entities are allowed to take 15%, rest are all up to 5%, etc., etc. Okay. Now, if it is within the exchange segment, like you have a currency segment in NSE, BSE, or like that. If you want to start as a separate segment, probably you need to have a separate bylaw, separate membership, but you don't need to have a separate net worth requirement and separate what should I say, the boards and all attending costs associated with it. So we are planning to have only a separate spot, what to call a segment. Now, what is the timeline? We're looking around September is a framework that we are looking at, but it's only tentative. We are not as yet formed it up because work is just started, and SEBI has come out with with its regulations just about 10-15 days ago. Having said this, I must also say that it will be traded in ENRs, the EDRs, electronic gold deposit receipts. Now, there is a what we call that is treated as a security, but once you start taking delivery, then it will be a GST is applicable. So there are certain GST challenges that needs to be addressed, and government is not able to address as yet. SEBI is pursuing with the GST Council, etc. And that is something which is may take time. So that is why we are hopeful. It may not immediately pick up, even if there is some head start delay. That's what we are looking at. Thank you.
Understood, sir. Thank you, sir. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Devesh Agarwal from IIFL Securities. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Sir, just wanted to understand, there were some talks of within the margin requirement also, the different components that are there in terms of BG, cash and others. There may be certain limit, and the cash component can go up significantly from Feb onwards. Is that correct? And if that happens, would that further impact the volume? What is your assessment on the same, sir?
See, there is already limit is there. I think the other cash and cash equivalent cannot be less than of certain percentage. The securities component, it cannot be 100%. Securities can be with haircut, can be only 50% of the total margin given, etc. I think that system is being put in place. That is also there in to some extent already in place, but that bifurcation for exchange wise, segment wise is not there. So what the issue will be, if the client has given one client has given a more cash, and some other client has given a more security, although we consider broker whatever the broker gives me as the collateral for me, because that is not transferred to me, the client's money, except securities which are pledged. I have to apportion, brokers have to apportion how much margin limit has to be given subject to those ratios, that is cash versus non-cash ratio. So that is adding complexity to the entire operations. And the SEBI is, I think that is implementable from 28th February to 8. Okay. That is something which is work in progress. And we have also discussed with SEBI. I think it's only complicating the issue. So let us see what will happen. I'm sure broking industry also is represented collectively on this.
Okay. But just to understand it better, sir, currently the cash component will be under 10% of the total margin requirement, and that can increase to say 40-50% if the regulations were to go through as it is.
You see, that is what I'm saying. It currently we are taking only from the member brokers. Okay, we don't take directly. We don't manage client collaterals at our end. So it is the broker who has to collect the margins. So those ratios will alter.
Okay.
We don't take directly from the brokers or from the clients.
Right, sir. And in terms of, sir, the operating expenses during the quarter, is there certain element of expense towards TCS in the software charges? Because the number looks slightly higher than what the formula would have given out to be. Have we expense for TCS?
No, there are some expenses, okay, no doubt about it. But all that, some of the expenses are what should I say, one-off expenses in the month of December, November we have incurred. Mr. Bolar, you can explain whether...
Yes, I'll explain. So, we had certain building repairs in the premises, so we had one-off expenses. Also, there were some marketing expenses which we incurred. That's why there's a slight dip in our expenses. There's nothing that we're paid to, extra that we're paid to anyone in connection with our software or anything like that.
Understood. And sir, can you quantify this one-time expenses on an overall basis?
Around less than 1 crore.
Less than 1 crore, okay. And this migration that we are looking for is from September onwards. So you did say that the testings are in progress. So are we on track to migrate to the TCS platform from September onwards?
As of now, yes. Okay, that's what the confidence TCS gives it to us.
Okay. And sir, how much have we spent on this contract so far?
I don't think we are giving out those numbers as of now. That's the way. Because it's hardware comes software. We have already acquired the hardware, and some software has got some phases. Accordingly, we will be paying them. And yes, that's the way it is at this point in time.
Okay. And so last,
yeah. Go ahead.
Yeah, and last one, sir, the other income looks slightly lower. Are there any M2M losses or anything in the quarter in treasury income?
Not really. I'll take this, Mr. Reddy. As we discussed in the last meeting, we said that we had some tax-free bonds. So we have exited fully from tax-free bonds, and we have parked it temporarily in short-term and ultra-short-term mutual fund schemes. And as you know, in December, the yields had gone up, the 10-year yields had gone up. So but there's no loss. There's no loss that we have booked.
Okay. And I think the tax adjustments are likely to be done only in 4Q. So for the first 9 months, we have not done any tax adjustment towards MAT.
Yeah. No. So, as we mentioned in the earlier, whatever adjustments we have to do, we will do it in March. But since we have sold...
Ladies and gentlemen, I would request you to please stay connected. We are just trying to reconnect the management back to the conference. Requesting you all to please stay online.
Yeah, I'm there on the line.
Yes, sir.
Mr. Bola, are you there?
Sir, we just lost the line for the boardroom. I'm just reconnecting them. Allow me a minute, please.
Okay.
In the meanwhile, would you like to take the question after? I'll just connect the boardroom.
Yeah. On the MAT credit and the long-term losses, I think we have almost all exhausted all that. Maybe we will be moving into a different tax rate now. Hello.
For FY22, the effective tax rate will be, as earlier guidance was around 18%. Do we hold with that guidance, or there will be change in the guidance for effective tax rate for FY22?
I think in the last quarter there could be some change. That's what I can see.
Hello, am I audible now?
Yeah.
Okay.
Mr. Bolar is asking what will be the effective tax rate. Will it change in the fourth quarter, or last time you given a guidance about 18% is the effective tax rate, whether that holds good? That's what he's asking.
It will be a bit more than 18% because we have exited from tax-free bonds.
Okay, sir. Understood. Thank you so much.
Thank you. Thank you. The next question is from the line of Sanket Gora from Spark Capital. Please go ahead.
Thank you for the opportunity. Sir, just wanted to understand, out of the total volumes, what happened at the exchange, what percentage of the volumes happen on an average during 5 o'clock to evening 5 o'clock to 11:30, where now the new peak margin rules are getting implemented. So where probably it was no impact in the past. So can we see some margin, some volume downwards, or if you can quantify what percentage of on an average volumes happen during those hours compared to the entire day?
See, earlier we used to have about 50-50 to begin with. Okay. Prior to first session is 50%, the second session is 51%, something like that, 49-51 like that, and subsequently it moved to almost all 55-45 kind of thing, 45 in the morning and 55, and now again coming back to maybe 50-50.
Okay, got it, sir. And sir, what will be our average realization in the options contract? I mean, in futures it is 2.07 rupees per lakh. Then in options, will it be closer to 450 rupees? If you as per the premium turnover?
As for the premium turnover, ours will be 45 rupees or 50 rupees. About 40 and 50. 45 rupees is average. You can take 45 rupees per 1 lakh of premium. Praveen, you can correct me.
Yes, sir, that's right. Since it is between 40 to 50. At an average, you can take it as 45.
Yeah.
45.
Okay. Sir, just asking a very fundamental question. See, whatever growth we are seeing in the options is probably at the expense of futures. And in futures, the realization for the same ADTO is far superior compared to the options, because there we charge on premium turnover instead of total turnover. So honestly, if that is the trend or that is the new reality, then options volume ideally should be growing at multi-x levels compared to what we are seeing now, so that it becomes revenue neutral. So just wanted to understand your view on this. Basically, given in options we charge premium, not on the ADTO in that sense.
No, you are absolutely right. In the previous meeting also I said, 1:3 ratio this follows. Now 3 times of turnover in options will be equivalent to 1 time of futures turnover. That's the way it is. So currently we have 10,000 crores ADT in options turnover. Okay, that is equivalent to 3,300 crores of futures turnover. Whatever the futures turnover of 3,300 crores revenue comes out of that is equivalent to what 10,000 crores of options turnover. That is
I understand that point. But
so we need to you're right. We need to ramp up the options volumes. So if it is 30,000 options volume, then we will get it's as good as we are getting 10,000 crores. And my view is options are going to pick up. It is happening. It's happening, and we have seen more and more participants, brokers, and all those are coming into this.
So currently, sir, the mix is 80-20. 80 is futures and 20 is options in ADTO terms. So we can assume that, but in a year or 2 years period, it will be more like 50-50, so that it becomes revenue neutral. Or you are very confident that 3x growth in the options is going to sustain going ahead also.
That's the way I look at it. That's the way. That's what our efforts are all towards aimed at.
Okay, sir. And finally, on the spot bullion exchange, so basically, we need not apply for a separate thing with SEBI. Whenever this spot bullion exchange starts, we will start it as a separate segment. So only product approval is needed from SEBI, nothing more than that. So it is true for every exchanges, maybe like NSE, BSE, if they want to follow the same approach the way you are trying to say, sir, right?
They have to apply for a segment approval, not just a product approval, segment approval also. Because segment will have its own bylaws. Segment will have its own, membership. Okay.
But sir, does it mean that there will be more than one exchange operating in the spot exchange also, spot bullion exchange too?
Could be.
Oh, okay. I got it, sir. Then perfect. That's it from my side. Thank you.
Thank you. The next question is from the line of Sameer Dalal from Natvarlal & Sons. Please go ahead.
Yeah, hello. So my question is regarding this change in software that's happening to the new TCS software from September. I wanted to understand, I mean, we've discussed this in the past, of course, but what kind of savings per quarter or can we expect once we do this, once the shift happens?
See, currently there is what you call a transaction linked revenue sharing that is taking place.
Correct.
Okay. So that is done away with it, point number one, structurally speaking, in terms of contracts. Okay. The second one is, it is a fixed for a period of 6 years. So whatever we have entered into agreement, that is for a period of 6 years. 1 year is warranty, and rest of the 5 years is the period contract. And thereafter, we have to pay an AMC, which is less than, it's a single-digit figure. That's what I have been saying.
No, is this single-digit figure is per quarter, you're saying?
No. Because single-digit for the entire year, per annum.
For the year. And that will be after the 6th year?
After the first year.
After the first year. So what is the total investment that will be going into this entire hardware plus software which you mentioned? And of course that will be depreciated, but if you can just give us some thought process on this. Like I said, it will be single digit, it could be 6, 7, 8, 9. I mean, I don't have a number, so if you could just give us some particular kind, so we can try to decipher what kind.
The contractual obligations do not allow us to reveal the numbers, honestly. Okay. Probably as we go along, when we start depreciating, you will see the numbers coming in. That's very good.
Okay. Now the other point you were discussing about the turnover criteria, that 3 times the turnover of the options is equal to 1 time that of futures, correct? On the revenue front.
That's right.
This is on the daily notional turnover, not on the premium turnover, if I'm correct, right?
No. Yes.
Okay. So at the moment, if we are doing about 8,600 crores of turnover, which you did in Q3 on an average basis on the option side, that you're saying is roughly equal to about, say, 2,700 or 2,800 crores worth of futures contract, correct? Is that a fair assessment? Okay, that's what you're saying. Okay, that's one clarity. And you said that you are of the view that options contract is expected to grow. But if that grows, do you think that could hamper our futures contract also on the negative side? Because like we discussed, that it is cannibalizing to a certain extent the futures contract as well, right?
No, you see, there are one set of players who write options. There's another set of players who play who are buyers. Okay. Now, the retailers mostly are on the other side. The writers need hedging also instrument. For the writers, the hedging instrument is futures. Okay. Have I made myself clear? For writers, option writers also need to hedge themselves. And for them, the hedging instrument is the futures contract.
So you are saying overall you are expecting a growth in both sides if the options contracts grow.
That's right.
Okay. All right. I'll come back in queue. Thank you.
Thank you. The next question is from the line of Aman Shah from GD Investment. Please go ahead.
Hello. Good evening, sir. So my question is, we earlier were actually talking of settlement guarantee fund, where I think to and fro of funds is not yet allowed. So we had to actually, when times of high volatility is there, we had to increase margins because withdrawal of funds from SDF was not in a way allowed. What's the situation there, sir?
Okay. That's a very good question. I really appreciate this focus of it. You're absolutely right. SGF has become a constraint for us. and we are willing to contribute as long as we are allowed to push in and push out the funds as in, pump in, pump out the funds as in needed. Now, just on 27th December, we had a risk management committee meeting in SEBI where the working group of exchanges has made a presentation and its report. So with that report, the SEBI is considering it. The risk management wanted SEBI to give its views in the next meeting, and thereafter we will have that final decision on that will be taken. But otherwise, currently we have 510 crores of SGF, and our contribution is almost all our 400 odd crores and 400 crores, both MCX and CCL contribution, and the rest is all penalties which have been accruing over the several years. That's what it is.
Okay. And post that, if it actually leads to a favorable thing for us, it should positively affect our volumes, because we can then change margins.
We can reduce the margin in crude oil contract. Currently, it's about 24%. We can bring it down to 10%, whatever is the minimum initial margin required. And so is on gold. We have additional 2% margin extra. Okay. Now the natural gas options are increasing, and even the option positions also require more, HGF cover as well.
Right. Okay. And second is, sir, on this domestic spot bullion exchange. Basically, just want to understand how does it, like the disintermediation that we will be doing here, which participants we will be serving, first thing. Second is, what will be our advantage compared to the physical spot bullion market right now? And mainly the disintermediation benefits that will be there, which will be passed on to participants. And like just how big the potential is and how much can we actually capture it?
On the domestic spot exchange, our view is there's a lot of non-transparency in transactions that are taking place in domestic physical market. Okay. Now that all gets eliminated. There are many people who prefer transparency. There are many people who want accounting to be done properly, and there are many investors who wants quality stock to be received by them, and etc. etc. For example, a lot of investors want to take the gold in small denominations and then save, and at the end of maybe accumulation of 500 grams or a kilo, probably they want to take delivery of the the jewelry for post making. So they can transfer it seamlessly, those EDRs, and make the payment of GST as well as the making charges. So today, whosoever is going around in the jewelry bazaars of the country, they all will be flocking towards to this exchange platform. Number two, even in many small towns, they go to jewelry shop and they don't have any guarantee of the metal that they are getting. They are not sure of the quality, whether it is 24 karat or it is still lesser, etc. So this will really help in bringing integrating this non-transparent market into a transparent market. This is a major development. The third, which is equally important, is might is right is the kind of thing is also there in this market. Okay, and big fish eat the small fish kind of thing. But when they come onto the exchange platform, all are equal. Transparent pricing, and small jewelers and small bullion people also can buy it on the exchange, take delivery, and be happy about it. Now, having said this, there are also arbitrage opportunities that will emerge. Currently, that arbitrage opportunities are not facilitated through an institutional mechanism. the spot exchange versus the futures exchange that we have will have a lot of synergies between the two platforms. Sorry. Go ahead. I'm done.
Okay. So basically what we are saying is like, apart from all the qualitative part where the quality is there, transparency is there, and arbitration benefit will be there, which will be a main quantitative benefit of this disintermediation. Would that be the right assessment of it?
Yes.
Okay. And what will be regulatory roadblocks in this? One is you said of the ADR when it is delivery taken, the GST is an issue.
What I'm saying is, see, I'm the one I import gold and I convert into EDR and then I sell it in the market. Now, this EDR being a security, the other party which is buying it doesn't pay any GST and right up to the chain. But the guy who first time dematted, he needs to get his GST credit, isn't it? Because he paid GST and then brought it.
Right.
Now, if the end party takes delivery or takes out of the vault after 1 year, then the payment of GST will happen only after 1 year. Will the first party wait till then? My answer is no. So there must be some solution for the first party, which is depositing the gold initially, to get the benefit of GST the moment they sell it in the first time on the exchange.
Okay. Sure, sir.
Ready, sir. I'll add one more point for Aman.
Yeah.
Aman, see your query on spot exchange and its future potential.
Right.
This is Manoj Jain this side. So yes, you are right. See, in India it is getting launched first time. So naturally you would want to understand that what are the nuances, what parameters, how it will pan out. So to give you a very easy and a readily available information, you can look at China. China has a very well thriving spot and futures market on gold. And as you know, I mean, we are so demographically related amongst the largest consumers, importers of gold. And obviously in India also government is very keen to grow this market, which is again a similar thing which happened in China. You can look at their past history. They are amongst one of the largest exchanges involved on spot trading in gold. And we expect that you will see a lot of similarities in our growth cycles also in India. It will be a huge, and it is available on web, huge data, trends over the last few years. You will get wealth of information there.
Right.
Thank you. Thank you.
Okay. Sure. Thank you, sir. Thank you.
Thank you. The next question is from the line of Sri Karthik from Investec Capital. Please go ahead.
Thank you. Sir, if you could speak a bit about the operational issues that you'll have to go through for making the technology transition, and what would happen in the event of any delays with respect to timelines involved here? Thank you.
See, at this point in time, we're not envisaging any delays at this point in time, and we are confident. The TCS is confident, and they are assuring that they will deliver it. So we are not debated that hypothetical question. And yes, MCX has a right to use the software, the current software, perpetual license that we have. May not be getting the support. That's the one way of looking at things. But yes, that is the way it is at this point in time. We don't expect to overshoot the timelines.
And is the mock testing already taking place?
As I said, the drop 2 has been delivered and the testing is going on.
Understood. Thank you.
And we are engaging with all the vendors, the back office vendors who provide solutions to the member brokers. They are actively involved. File formats have been released. and the API based, obviously all of them have been released.
Thank you. That is it from me.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
So one question, sir, on the option trading. How big is option trading for the other international commodity exchanges? And second question was that the PD, the option is primarily happening on the energy, right? Side. Is there any? Do you think the bullion will pick up in the near future for the options?
Could you please repeat? I couldn't hear your question. Sorry.
Yes, sir. Am I audible now?
No, you are audible. There's no problem. I had a cough, so bad cough, bad throat.
No issue, sir.
Sorry.
No, sir. I'll repeat, sir. So, what is the how is the option trading compared to futures trading for the other international commodity exchanges? If you can comment on that.
Yeah.
Secondly, is that we see the options volume is picking up only for energy, right? Do you think option volume for bullions or other materials will pick up in the near future?
Yeah. See, on the options, internationally, you're absolutely right. They are not great. Okay. And peculiar to India, even in equities, you have seen how the option contracts have been doing. Maybe several times with a multiplier, they're trading. So the same trend is being witnessed in India also. So that is the reason why we are more in line with what's happening in equity markets. Now, coming back to the gold and silver, why they are not doing it? I think we are amending the contract specifications. Currently, our gold contract 1 kilo is tenure is bi-monthly and it's long. So as a result, the premium is also very large. Now, because these are options and futures, they devolve into futures contract before the underlying is expiring. So we have just had a product advisory committee meeting where we are breaking it into two contracts, monthly option contracts, which will devolve into the underlying futures contract. Okay, so it's a March-April contract. So futures contract is a bi-monthly, but one options contract will expire in the end of March. Another options contract will expire at the end of April. As a result, the premium may become off than what it is currently. So that I think we are making an application to SEBI after getting the necessary regulatory approvals within the exchange. We just had last week the product advisory committee, which has approved this change. So similarly, we have also got an approval for introduction of 100-gram gold bar. I mean option on mini silver mini gold mini. So earlier we had introduced option on goods on the under 100-gram gold, but that didn't take off. Now we are making it option on futures rather than on goods. So these two we expect to do well, and that will pick up the other contracts.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, hello. Yeah, hi, sir, and thanks for the opportunity. So my question is on the institutional participation. So we have not seen that actually going up, and also on the index volumes. So I think the institution and the index volumes are somehow linked because the index is actually cash settled. So what factors you think that it will actually boost the institutional participation, and also the index options and the index futures contract? Because if I see index options is a product which is very popular in India.
Yeah. the institutional participation, yes, it is coming in bits and pieces. That is something which is been on the top of our mind, and we have been working with the most of the mutual funds. One is that not every fund is taking delivery of or participating on the exchange by taking exposure for part of the gold or gold ETFs that they have. The reason being, there are 2-3 reasons which we have already addressed to SEBI, asking them to understand this. Under the extent whatever regulations or something, whatever they have, they're supposed to have LBMA approved gold only. Now we have introduced the India Good Delivery Gold also. That's what the government wants us to do it. We have done it. So the custodians are having reservation of taking delivery on the exchange platform. The reason being that they may end up India Good Delivery Standard but not LBMA. So that requires a change which we have addressed to SEBI. Similarly, on recently after a lot of effort, even from our side also, silver ETFs were permitted. A lot of mutual funds have already opened NFOs. Some are yet to close. So these funds are looking at at this point in time, what SEBI circular says is it must be a 30 kg bar. Now, in the case of silver, it may vary about 2.5% plus minus. There is a tolerance limit. It will not come in 30 kgs exactly. The weight keeps varying it. So we have represented to SEBI, please amend this regulation. Don't say that they should get it only in 30 kilo bars. It could be plus or minus whatever the tolerance as per our contract specifications are there. And one more thing is that some of them, as I explained, don't have even set up a desk for commodities, which they consider it is an expensive thing at this point in time because they are not into commodities. And I think that goading and is happening gradually, and probably by in the next maybe 6 months time, we should be able to see some more greater degree of participation. And probably if the FIs and others join, as SEBI is decided to permit, probably the institutional participation also will pick up, is our view.
And sir, on the index side, what factors you see will boost the index volume, especially on the index option side?
Yeah, one is that on the index volumes, the open interest limits are just 1,000 lots. Now, 1,000 lots versus the underlying contract 17 times. I repeat, 17 times. For example, gold, underlying you can have 17 times more than what you can take in index contract. So we have represented to SEBI, there are times where the people have already exhausted the 1,000 lot limit, and so please expand this, because they need a minimum volume size, and unless the volume increases, unless these limits are relaxed, we will not be able to grow. So that is where our representation is, and SEBI said we will consider and come back on that. Second, in some of these contracts, especially the energy contracts or cash settle contracts, SEBI has also introduced what you call pre-expiry margins. Okay. Now, pre-expiry margins, in addition to higher margin that they are doing it, 5 days before the pre-expiry margin starts, so that people are moved away from the contract to the next contract. Okay. Now, as a result, the number of trading days are coming down. Although as such they are monthly contracts. In a month you have 22 trading days. Over and above you have a 5 days is killed by way of this kind of rule. Pre-expiry margins. Okay. So the liquidity is impacting because of these regulatory hurdles.
Okay. And sir, on the this crude margins, so we were expecting that to come down, but it has actually gone up. So what are the factors which are actually deciding to increase the crude margins, and also on the top 10 concentration of our members? So is it coming down YOY or is it going up?
See, top 10 members is by and large remain the same, around almost 55 to 60%. Mr. Praveen, you can comment on that. You have it. Concentration of members, top 10.
Yeah,
it's about 60%.
It is around 60% top 10.
Yeah, top 10 accounts for 60%. It's been there earlier also. So that is one part of it. Second thing is the crude oil margin primarily it depends on the open interest. And the open interest, how much it will bring in, how much it will make our SGF requirement increases. So if it increases our SGF requirement, MCX and then CCL have to contribute in the ratio of 25 to 75. And this is where I pointed out, one gentleman asked one question, whether SGF you can contribute, put in and pump in, pump out the money, which we have been looking for SEBI's help in that. If that happens, we would like to lower the margins, pump in more funds, allow the liquidity to build, and that's the way it is. And we don't need to show that as a permanent loss to SGF. That fund can be taken back once the OI comes down or concentration comes down.
Okay, sir, and thank you and all the best for the future, sir. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Vikren Shah from Omkara Capital. Please go ahead.
Hello. So the way I see it, domestic exchanges have never been a competition for MCX, and volumes are very sticky in a business like this. However, global exchanges, where most of the corporates have hedging themselves, is the customer segment for MCX. So how does MCX plan to grow? The market share overall.
I'm sorry, I couldn't get you the question clearly.
So I'm trying to say that domestic competition has never been a competition for MCX. However, global exchanges, would be the real competition in a business like this. So how does the management plan to grow the market share going forward?
Okay. How do we increase our market share globally? Okay. Now, if you see, honestly, we don't have an ambition to compete with international exchanges. Let's be very clear. Okay. And we need to be first grow in the domestic market. There's so many restrictions within the country which we face, but they don't face it. Be as it may be. Now, if you see, whom are we catering to? No international player is coming and then hedging on Indian exchanges. It is just the domestic SMEs and domestic players who cannot go abroad and then hedge their positions are hedging on domestic exchanges. Now, so our contract size is small. For example, in London Metal Exchange, ours is 5 tons, theirs is 25 tons. Now, obviously 25 tons is not required for many of the domestic players. So that serves our contract or our market serves that smaller segment. Now, once we are able to effectively cater, as of now we are not able to cater to all of them because of the nascent stage in which this hedging is taking place, and many do not fully understand what hedging is, whether it means loss of money or whether it means no loss, no gain, or it means gain. So people are not able to fully assess its impact. So at this point in time, our interest is to increase the domestic participation in these contracts and make it serve the purpose for which these hedging products are devised. If once the domestic liquidity builds and more and more open interest increases, then we can look at others coming in. Now that is where I am looking for greater participation of institutional investors as well as the the FIs who may bring in more liquidity to these counters and open interest. Then even some of the big players in the domestic market can take a look at the contract. For Hindalcos and Balcos or Vedanta, they are hedging in international market, be that on ICE or in CME or LME, and they say your contract is not liquid. 4-month contracts are not liquid. Obviously, I can't provide liquidity. I can only provide platform for them to trade. So that is something which we are struggling with, and it's an egg-chicken situation for us. And hopefully, we'll be able to address with greater participation coming through some of these institutions and FIS and other players. Let's see.
All right, great. That's it from my side.
Thank you. The next question is from the line of Akshay Vora from Praj Financial. Please go ahead.
Hello. Yeah, I wanted to understand the client concentration that we have in our derivatives volumes, and like the top 10 or top 20 clients, how much of volume would they be giving us? Hello.
Yeah, 1 minute. I'm seeing that. I don't.
Client level, I don't think we have readily. It is available. In fact, we publish it on a daily basis, like whatever is the OI position across the top 10 clients. Across the commodity-wise, we give it. And we don't have at the exchange level. And it varies depending upon the contract to contract.
Okay, but like an overall idea?
At least I don't have the numbers right now, the numbers. Okay,
but we have the algo versus clients. You have the algo versus clients, isn't it?
Yeah, algo. Algo is about, if we want to give that way, it is roughly 48% algo for the 9 months, and 52% is the non-algo. That is the structure.
Okay. Thank you.
Thank you. The next question is from the line of Priyesh Jain from Motilal Oswal. Please go ahead.
Just one basic question with regards to your my existing payment to 197. How till what date we have to pay them in terms of the in terms of the software charges that is currently based on the formula?
I'm sorry, whom do we pay?
So the software charges that we are paying right now, which is going to be transitioned to TCS, that payment currently that is being paid to the entity. That entity, till which date do we have to pay them?
That is the current software vendor.
Yes,
that is 63 Moons is providing the software. How long do we need to pay?
Yes.
We need to pay till September of 22.
September of 22. Okay, and immediately from afterwards, it goes to TCS.
That's right. We want to migrate it much before that.
Okay. And just one very basic question again. What would be the average, premium on the option for the quarter?
Yeah, that number's already given in the presentation. I'll give you the numbers. It is about 11 crores for the quarter Q3. It is just 184. 180 crores versus the premium turnover is 184 crores versus the notional turnover is 8,610.
Okay. All right. Thank you so much.
Thank you. The next question is from the line of Nilay Chitani from BOI AXA. Please go ahead.
Hi, sir. Thanks for the opportunity. So just wanted to understand. So in case of driving the volumes for the options, you are planning or on the position to divide the 1 kg contract into 100 grams as far as the bullion is concerned.
No.
Is that already done?
No, that is not correct. We are not changing the contract. Please, futures contract remains as a 1 kilo and bi-monthly contract. The options on futures, that is the option on future contract, will be a monthly contract. So before the expiry of the futures contract at the end of 2 months, there will be 2 contracts. One will expire in the 1 month and next one will expire in the next month.
Got it. So this will help to reduce the premium number also.
Absolutely. That is, then the participation will increase.
Got it. So this is already done, or we are in the it would be implemented going forward?
No, it's not done. We had a product advisory committee meeting. It requires a lot of approvals. Then we will take it to our regulatory oversight committee. Then we have to take it to SEBI. It's like that.
Okay. So how long it would take to do this?
It may take about 2 months' time.
Okay. And are we planning to do this for other commodities also? So for example, crude, we have 100 barrels. So are we planning to reduce that?
Yeah. So just to add to that one, see, it is only in case of bullion, because we have bi-monthly contracts. For example, if you take gold and silver, they are all bi-monthly contracts. But in case of crude oil, already monthly contracts are available. Whether we wanted to go for a weekly and another thing, that is currently, whatever monthly contracts, they are already doing extremely good. Okay, and bullion are the ones where the participants have been asking for monthly contracts, because the bi-monthly, because of the duration is higher, the premium is getting higher.
And apart from it, the value of bullion is also gone up. Now it is almost all 50 lakhs. So with 50 lakhs of contract, what the premium of 2 months will be very high.
So one advantage, like just to add to that one, like a gold mini, which happened to be earlier when it was launched, that time it was launched as a option on goods contract. And what we plan to do is we wanted to come out with a gold mini option on futures contract, because on our platform, the gold option on futures have been doing extremely good. All our contracts happen to be option on futures.
Got it. So one is this time duration where we are taking it down from 2 to 1 month. So my question was on the crude side, there is an optionality where we can reduce this number of barrels for the options contract and again increase the volumes over there. For the
one of the regulation, what they say is there are 2 challenges to that one. One is the regulator says that we cannot have multiple variants. We need to have only one variant. Apart from in bullion contracts, if you look for any other contracts, we need to have only one variant. We cannot have multiple variants. So the current
that is why we have done away with the mini contracts. Otherwise, mini contracts were getting us about 30-35% revenue. I mean, we did it into these. So we had aluminum, copper, zinc, lead. All of them had mini contracts. They have done away with it. We had a crude mini also. That is done away with it. And apart from it, the options have to result into underlying contract, underlying futures contract. So we can't bifurcate into a smaller one, because the underlying is 100 barrels.
Got it. So what kind of volumes are you guys sensing which would be picking up because of this bi-monthly?
No, I don't think we will give out any numbers on that. No, thank you.
Makes sense. Yeah, that was my question, and thank you so much.
Thank you. The next question is from the line of Aditya Yadav from Transcend Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, firstly, I wanted to ask regarding the gold mini option you were talking about, that you had certain disadvantages with the option on goods and you plan to reintroduce it as an option on the future. So if you could elaborate a bit on that, what kind of disadvantages we had with option on goods?
See, we had introduced option on goods along with the what we call LES, Liquidity Enhancement Scheme. Okay. Notwithstanding the quotes being given two-way, the people are not coming forward because the option writers have to deliver necessarily the option. They don't know exit for them except for delivery of the goods. Okay, and the buyer also has no option but to take delivery, whereas people got used to it, the futures contract, and they're willing to. I'm sorry.
As a cash settlement.
As a cash settlement, and or even if they will get extra days because the liquidity will be more here in the futures, so they get more time to liquidate before the option expiry. I mean, option expires into futures contract 3 days or 5 days before the future expires. So they have an option to exit.
Okay.
That's why the goods contract did not succeed.
Okay. And sir, good discussion we had on the bullion and the energy part. And if you could talk a bit about the base metals part also, that what are the challenges here and what are the efforts we're taking to grow this market, and any kind of qualitative assessment for near term, let's say 12-15 months.
Yeah. See, in the case of bullion contracts, one is that we are admitting the domestic. I'm sorry. In the case of in the case of base metals, we are taking some of the domestic refiners bringing in so that their participation will also enhance liquidity into these products. So we have that is one quick decision that we have taken, and it will happen maybe next week or so. Some domestic refiners in lead will be admitted. Now, the second thing is we have introduced the multiple delivery centers in these contracts. If you look at it, some of these metals are imports, so we need to be proximity. Our delivery centers should be close to the ports. So we have opened additional delivery centers in Calcutta and in Chennai, and we have expanded them for other products also. And in the right up north, in the Noida area, where there's a lot of consumption of this metal takes place, we have also introduced an additional delivery center. Now, the third dimension is that we are also looking at, we have filed for steel TMT bars approval, as also for aluminum alloy. These are the two contracts that we are looking forward to.
Exactly, and this you discussed in the last call as well, that these are you want to introduce these soon. So any kind
but we
of
have not
timeline?
received as yet. We have not received as yet the approval. It is. I mean, it looks as if so near, but then we missed the bus. That's the way it is. We are not getting them as yet. A lot of questions back and forth is raised.
So let's say in a coming quarter or so, should we expect these to come on board, these contracts?
Yeah, it is one contract. Steel TMT we expect to come in. Aluminum alloy. Aluminum alloy, they are expecting the BAS to notify those specifications. Now, BAS takes its own sweet time, and SIDAC has already approved it. That if the BAS has a standard, it's fine. If it doesn't have a standard, then whatever MCX or any exchange suggests, we should go forward and approve it. That's the way it was decision was taken. And but still TMT, if it comes, I'm sure there we will be able to do good business. That's what my hunch is.
Okay. So probably soon. And sir, one last question I had. So with the spot exchange, the domestic one, you have discussed that the expected timeline is September?
Yeah, that's right.
So you plan to launch it by then?
That's what our guesstimate is, Rohit.
Okay. And with the international exchange, what are the timelines?
That is already placed, and mock runs are taking place. I think it's the government has to inaugurate it. They have to put a date and inaugurate it. That's the way it is.
Okay. The mock runs are taking place.
Yeah.
Okay. Thank you. That's it from my side. Thank you.
Cool. Thank you.
Thank you. The next question is from the line of Siddharth Shah, an individual investor. Please go ahead.
Thanks for the opportunity, sir. Sir, my question is on the broader path for the company going forward. If I see the company's profit was at peak level around 2012-13, around 300 crores, and we have come back with a slightly higher profits in March 2021 with 225 crore, and with current run rate during current financial year we will do 150 crores. So, sir, despite all the initiatives taken by the management, the financials have not really improved. In fact, they are showing a declining trajectory. So, sir, do you see in next 2-3 years we will be able to achieve the peak profit of 300 crores in next 2-3 years?
See, I'm not giving any number to it, but this happened to be a very bad year. Okay, it's a very bad year. In terms of other income, that is also hammering us. In terms of regulatory tightening, that is also hammering our growth. So from all sides, we are cornered in that sense. So we are hopeful. Maybe the new year holds a promise. The way that we are moving forward, and hopefully we'll be able to achieve something in that.
Okay, sir. And my second question, sir, any clarity on the 20 crore that we have spent on this gold bullion exchange? Are we going to amortize it or write it off any amount in next 6 to 12 months?
We are yet to take a call on it. That in this quarter we will be able to take that call.
That is, you are saying by March 22 quarter we'll be able to take a call?
That's right.
Oh, okay, sir. Okay. That's it from my side, sir. Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thanks to all of you and being patient with us. And yes, we are making every effort to bring make best out of the worst situation that we are currently in, and in terms of regulatory framework as well as the interest rate structure that is currently, or the yields that are currently giving us. Hopefully, maybe next year we will be able to do better. And thanks to all of you for your interest in the company. Grateful.
Thank you very much.